Hi folks, Lee Gettess with the Market Sense for the week of August 30th, 2011. The charts we'll look at come from the Trade Navigator software by Gettess Financial Technologies. First thing I got to say about these markets is volatility usually picks up right after Labor Day. They're going to have an awfully tough time of overdoing what they did in August, let me tell you. Last week, we had 151 ticks of range in the bond market, and that was an inside week. I haven't gone back to test, but I certainly can't recall an inside week that was 151 ticks before. That's quite something. They've played around either side of 136.5 here. That's roughly where the green line is. And we're looking at them possibly going back up to 139.08. Now that we are in the December contract now, so the prices might be a little different than what we've been used to. 139.08 is the upper resistance here, and of course they could just take out the highs and go up over 140. The support is down in this area around 133. You can see a really wide range between those two. But we've got 3 days in a row, the ADP employment report on Wednesday, the ISM report on Thursday, and then the monthly employment report on Friday. So there's plenty of stimulus to get these guys pumping. No telling what they might do. Of course, wouldn't man if they just took another week off. I mean, 151 inside week, we could have another inside week, and it wouldn't have to be tiny to do that. In stocks, again, volatility is the order of the day. They're kind of playing around either side of 1200 here. That's roughly where this area is here. And it looks like they really want to head up into this 1255 area. That would make a lot of sense since it sort of coincides with the previous swing low before they made this high. Again, that's roughly 1250, so call it 1250 to 1255 is pretty good resistance this week. However, because of the way this is set up here, if they dropped all the way down to this little green V here, that would be 1155, which sounds like a pretty big sell-off, but really, in looking at the price chart, that would just be a normal retracement back down and would actually leave the price pattern looking somewhat bullish, like they could continue higher. So, that much volatility, that much movement, pretty doggone tough to control the risk here, guys. And again, the 3 reports on 3 consecutive days don't make this any easier. So that's all we can look at the moment. I hope you can find something profitable to get yourself into. Thanks for looking to see what we think, and we might do this again next week.